In the United States, mortgages are a common way for individuals to finance the purchase of a home or other real estate property. The process of obtaining a mortgage in the U.S. can be complex, and there are a number of factors that borrowers must consider before applying for a loan. One of the most important factors in obtaining a mortgage in the U.S. is the borrower's credit score. Lenders use credit scores to assess the borrower's creditworthiness and to determine the interest rate and terms of the loan. Borrowers with a higher credit score are typically able to obtain a lower interest rate and more favorable loan terms. Another important factor is the amount of the down payment. In the U.S., it is common for borrowers to make a down payment of 20% of the purchase price of the property. However, some lenders offer loans with a lower down payment, although this may require the borrower to pay for private mortgage insurance (PMI). The type of mortgage is also an important consideration. The two main types of mortgages in the U.S. are fixed-rate mortgages and adjustable-rate mortgages (ARMs). Fixed-rate mortgages have a set interest rate that does not change over the life of the loan, while ARMs have an interest rate that can change over time based on market conditions. In addition to these factors, borrowers must also consider closing costs, which can include fees for appraisals, title searches, and other services. Lenders are required to provide borrowers with a loan estimate that outlines these costs before the loan is finalized. Once a borrower has obtained a mortgage, they are responsible for making regular payments on the loan. If the borrower fails to make these payments, the lender may foreclose on the property and seize it to recoup their losses. Overall, obtaining a mortgage in the U.S. can be a complex and involved process. Borrowers are advised to work with a trusted lender or financial advisor to ensure that they understand all of the terms and requirements.
A mortgage is a type of loan that is used to finance the purchase of a property. The property being purchased typically serves as collateral for the loan, which means that if the borrower defaults on the loan, the lender can seize the property to recoup their losses. Mortgages are typically offered by banks, credit unions, and other financial institutions. The terms of a mortgage can vary depending on a variety of factors, such as the borrower's credit score, the amount of the down payment, and the type of property being purchased. One of the most important factors in a mortgage is the interest rate. The interest rate is the amount that the borrower will pay the lender in exchange for the loan. This rate can be fixed or variable, and it can have a significant impact on the overall cost of the mortgage. Another important factor in a mortgage is the term. The term refers to the length of time over which the borrower will make payments on the loan. Most mortgages have a term of 15 to 30 years, although some can be shorter or longer. The amount of the down payment is also a key factor in a mortgage. The down payment is the amount of money that the borrower will pay up front for the property. A larger down payment can result in a lower interest rate and a lower overall cost of the mortgage. In addition to the interest rate, term, and down payment, there are other costs associated with a mortgage. These can include closing costs, which are fees associated with the purchase of the property, and private mortgage insurance, PMI, which is required for borrowers who make a down payment of less than 20% of the purchase price. Mortgages can be used to purchase a variety of properties, including single-family homes, condos, and investment properties. They can also be used to refinance an existing mortgage, which can result in a lower interest rate and a lower monthly payment. Overall, a mortgage is a complex financial product that can have a significant impact on a borrower's finances. It is important to carefully consider all of the factors involved in a mortgage before making a decision, and to work with a trusted lender or financial advisor to ensure that the mortgage is affordable and meets the borrower's needs.